Hi, John Ozzy here. I'm reviewing the account of one of our FTP traders, George. George has been trading with us from 26th of March 2021 up until this present date of reviewing the account, 29th of April 2021. George has maintained a gain of 11.59% with an absolute gain of 5.89% with a daily average gain of 0.31% with the whole month of trading with us. George has maintained 9.94% and has had a drawdown of 7.22%, which is very good. And as you can see that from the equity curve, George has risen from 0.34%. The drawdown that George had was only 3.16%, which is in the positive territory, and again 4.78%, again at 6.75%, and again at 8.22%, and now most recently at 3.53%. What we have to understand with George now, with the equity growth, as you can see on this line, and the actual account as well, you can see although the equities dropped down, George has always been on positive territory, preserving the balance and growing the account accordingly. So, which is very good and down to good money management. At present, George's account's been doubled to $30,000, and as you can see, he's about $266.52 in profit. Coming down to the week now, we can see so far this week, George has made $247.74, and at 67.20 pips, 100% win rate, two trades, and you see the differentials of the lot sizes as well. Coming down to the advanced analytics now, this is a part of the review that I like. I like to see how many trades have been taken. George has taken 119 trades, and out of 119, we can see the percentage gain is 92%. George has won 110 out of 119, only losing 9, which gives George an 8% loss and a 92% effective rate of success. So with trading, you can be right or wrong and still end up in profit. But how did George achieve this? Let's look at the summary of trades and see the most important trades that's helped George achieve this. George is very selective of his pairs, and I like this when I see traders focusing on the areas of strength. George has only traded three pairs: the Australian dollar, New Zealand dollar, the New Zealand dollar, US dollar, and the US dollar CAD. And out of all these trades, we can see there's a total of 45 trades on the US dollar CAD going long and 71 going short. So the US dollar CAD has really and truly given George his 10%, which is 151291 in profit, clean. All the other pairs George took on the short side helped him diversify, but they're all on positive territory. So his strike rate is 100% on the Australian dollar, New Zealand dollar, 100% on the Australian dollar, New Zealand dollar, and 92% on the US dollar CAD. So, George, well done in being selective in your pairs and being very conservative and preserving the balance. Congratulations and well done. Keep doing what you're doing as you've done before because now you're on another account. So all you have to do is just maintain your strategy, adapt your lot size to fit your risk profile, keep your emotions and mindset in place. And just like any job, trading comes with risks and emotions. When you can control your psychological advantage, and which is your emotions and your mindset, and you control the risk, the amount of capital you're risking to make profit in terms of pips, you've got the balance and you've learned how to control the most important thing that stops traders from making money, which is a positive mindset. So well done on that, George. And just a few things I'll just looking at from the month you joined us, March 20, 2021. You've made 2% gain, and the month of April, at the present month coming to an end, you made 9.44%. Well done in actually being in positive territory on both months. And just one little criticism on your trading. These are very good trades, and as you can see, George has had various lot sizes playing about, consistent wins and gains and losses. But George, I tell all traders, always put a stop loss in place. It's good trading practice. The reason why I recommend this is because when you put a stop loss in place, you control the trade. You know the maximum level you can risk. But clearly, you've been holding your trades from half an hour to maybe an hour, even holding this trade for 11 hours plus, not having a stop loss in place. is very dangerous. It opens the door to uncertainty, risk, and unconventional trading, risk exposure, and uncertainty, and that just has you all over the place. And it takes the whole concept of planning your trade, a trading plan, out the window. So routine, discipline, and consistency will definitely get you there. And as you go on to higher lot sizes, it's very important that you practice the aim of keeping a stop loss in place now, because if you don't do it now, this habit will grow with you as well, and it's very hard to change on the later stages. So George, all the best on the next level, and I'll look forward to seeing you achieve $60,000, which is the next 10% up, and all the best with your trading.